Good morning, all. I hope you are well. So, I have one pair on watch this morning, just the one pair, which is Kiwi Yen. There were some entries on the other pairs which I had on watch, and I believe on Aussie CAD. I might be wrong. I was just scanning through the charts, but I would have had to have been up in the early hours of the morning. I used to find that when I was demo trading a long time ago, almost all of my trades used to shape up during the Asian session for some reason. I don't quite know why that was, but so I don't sit up in the early hours waiting for trades. I let the trades come to me rather than wreck my sleep schedule. So happy to let those entries go without me. Without me, I shouldn't really say things like that. I'm happy to let those trade entries go, whether or not I'm on board or not. Okay, so I'm just going to concentrate on the one which looks likely to give me an entry by the end of the day, which is Kiwi Yen. I'm not here to get rich quick like the amateurs. I'm not here to catch every fish in the river, as it were. I'm just here to show up when I'm able to and execute accordingly if the market gives me an opportunity when I'm actually awake. So, with that in mind, let's break down Kiwi Yen. So, on the higher time frames, Kiwi Yen, you can see we have a high here. So we have these highs here, which prices near miss to. Okay, we know that typically these near misses get filled. Okay, so if we've near missed to this area by way of this high here, it is likely that we'll take out this high at some point. And you can see that we also have this high here, which near missed to here. But that we have to remember that we're on the monthly chart and that these highs don't necessarily need to be filled straight away. One of the things that stands out to me about this, if I just move that over a little bit, whoops. One of the things that stands out to me about this is that we have wicked above this high here, okay, implying that we've washed out a lot of the liquidity there. The other thing that stands out to me is that this is a bullish candle with a green wick above it, which has near missed to the area just above it, okay? So that gives me a clue that at some point we will likely fill this wick and likely take out this high which we near missed to because we wicked above it and near missed to that area by way of this bullish candle with a green wick above it. However, once again, that doesn't mean that we can't capitalize on a move to the downside in the meantime if one actually shapes up, particularly when you can see that this high that we've just tapped into and wicked above and likely washed out the liquidity that was sat above there. If you look at what happened last time around, there was enough of an exchange of liquidity here to cause price to smash through all of these lows here. Okay. And we know that typically, so that by definition means there's a lot of liquidity there, a lot of stop orders in that area. Okay. And if we sell off from that area, we may sell off with a similar level of aggression, okay, because the market is often repeating itself. So if I just take that off the chart, all that doodling, if we just zoom in a little bit, if you look at last week's close, if you look at this, let's just move that over a little bit. Okay, so if you look at last week's well, it wasn't last week's weekly close, but we had a weekly close which retraced over 50%. In fact, the entirety of the body of the previous candle. That is indicative of a move to the downside where we could potentially, even if we are heading to take out this higher high, the high just above, at some point we could capitalize on a move down to here potentially before we move up to there. And then that would give us that kind of 1, 2, 3 reversal structure, which we typically see. So even though we have near missed to that higher high, there is still potentially profit to be made. Okay. And you can see that price is just stalling here, consolidating potentially for the next leg lower. Okay. If we just analyze the structure as well, if you remember what I said previously, I said that although we had this reversal structure here, okay, we had that. One of the things that made me think that this wasn't going to be the structure that committed to the downside, like to break this trend line here, is because if you look at the middle section, that was impulsive. And I said normally we would see an impulsive move into the middle section, a more corrective move down like that, and then the more impulsive move out. But in this instance, we've got a more corrective move into it, a more impulsive move down, and a corrective move out, which gives me a clue that this structure is likely to evolve, okay, into this, okay, something like this, where this becomes the middle section. And then we have something like that. And then this is the more impulsive move. This is the corrective middle section that I was just talking about. And then we have an impulsive move out to break that high before that higher time frame move to the downside. But we shall see. Okay, that's just how it's looking to me at the minute. Okay, so you can see once again that we've had a bit of momentum to the upside on the daily chart. This was yesterday's daily close. I'm not surprised that we're coming back up, because what do we have? We have this green candle here with a big wick above it, okay, implying that this will likely get filled. If we just zoom in ever so slightly, you can see that this is a bit of a corrective wave already. This corrective wave here is giving me a clue that this is that higher time frame middle section that I was talking about for that move eventually to take out that high that we near missed too. Okay, but if we just zoom in, we can kind of pattern separate this, which is where pattern separation is something quite unique to the Falcon strategy. If you're new to it, this is what often gives us an edge, particularly in corrective waves such as this. Okay, so we can kind of separate this structure as one on its own, a little running channel there. Okay, I'm going to do all this on the fly. We then have this kind of structure here. We have the 1, 2, 3 middle section. Okay, this is what we would call an M style pattern. So you have this little consolidation here. It then goes into this, but this becomes too voluminous relative to the move down which has preceded it. And then we get an M style pattern, okay, which is when price, by definition, gives us a bit of a M style like that, or W, breaks above the initial impulse and then moves to the downside. We then have this, okay, where that becomes the middle section. We then have price leaves a footprint. Okay, we then have this. We have the middle section there. Price doesn't commit, perhaps because we actually didn't tap into the liquidity, which was sat just above. So then we go into a correction into a correction. We then have this, where that becomes the middle section. Then what we often see is these little mini scoop double tops right at the end before the drop, which is what happened. Okay, so that's called pattern separation. And you can see here, what do we have here? We have a new structure. We have the 1, 2, 3. We have this kind of middle section here. Okay, and if we just measure the impulses, and we assume, because when we get these impulse correction continuations, the continuation leg out is often of a similar length. Okay, you can see that that is of a similar length. That often implies a completion of a move. Okay, so if a move is completed, at an area of value where liquidity was built last time around and where we had a big runoff from, it is likely the fact that we will reject from that area again. However, because we're in a corrective wave, okay, so you can see the structures. You can see the 1, 2, 3 middle section, the 1, 2, 3, and then potentially that 1, 2, 3 to push lower. Okay, but because in this instance, so I'm going to get rid of all this drawing that I've done. Okay, so let's just put that back on the chart. I'll just want to keep that ray line that I had drawn there. Get rid of that. So what I'll be looking for in this instance is I will be looking for price to, we had a bit of volatility. We've had some news and so forth come out, which has created a bit of whipsaw. But what we typically find is that that's pretty much all it does. A lot of people don't seem to realize that a lot of this news is already factored in. Okay, if a country is founded on, if the banking system is an important factor in a country's economy, then it would make sense to me that a lot of these data releases would be given to the banks first before they're given to anybody else, so that they can trade accordingly. A lot of people don't seem to realize that when they hear the news, it's secondhand news in a lot of cases, which perhaps explains why we don't normally see news dictating the direction so much. Okay, more we just see a bit of whipsaw like this. Okay, so what I'll be looking for is I'll be looking for a push down below this area of value. Okay, to confirm that we're not going to push up, because we do have that high sat just above. I'll be looking for a 1 hour impulse down. We haven't had that yet. Okay, it is 6:58 a.m. as I speak. If we get a solid push down followed by a 2-touch 15-minute continuation, notice I'm often looking for a 2-touch 5-minute continuation as a minimum. When we have on the lower time frames a little area of value, so this is another thing which might help, particularly if you're new to Falcon. If you've just joined, I'm going to measure this range on the fly from here to here. Okay, it's not exact, but we just measure that. Okay, if we take that measurement and put it there, the reason I'm doing that is I'm measuring how far the top of this structure is from the high above. Okay, it is less than 50%. And now that we've wicked above, okay, this is a new thing that I wrote in my ASR over the weekend, to not just measure from here to here, but if we break above and break back in, I also need to measure from the base of the range to there, and then put that above, because that's something that I wasn't doing before. So this is a little, as well as I'm trying to help you guys and girls, I'm also learning myself as well. You're always a student of the markets. You can see that we're less than 50% of the range away. And because we're less than 50% of the range away, I will not be looking for a push down followed by just a little 5-minute continuation, because the fact that this high is sat just above here, okay, increases the risk, the likelihood of you being tagged in and then tagged out, and then price pushes up to there, and then potentially we have that kind of middle section, and we tap into that by way of a 1, 2, 3. So all I'm doing by waiting for a 2-touch 15-minute continuation. So if we push down and we get 6 to 8 corrective 15-minute candles as opposed to 6 to 8 corrective 5-minute candles, all I'm doing is waiting for just a little bit more confirmation that the market isn't going to do what I just described. Okay, because typically speaking, the longer the market consolidates sideways for, the more deliberate that is, and that is usually just the banks and the bigger players stacking their orders. And the longer that happens, then typically speaking, as long as it's not disproportionately wide relative to the move down which has preceded it, then it becomes less likely that it will just tag you in and do that. Okay, so, and as I've just showed you, we can separate the structures as well. So that's what I'm going to be looking for today, folks. If the market does push up to there, then we do have to factor in, this is another thing I was thinking before I went live. Okay, so if the market does push up to this high, there's another thing to factor in. Okay, so I would then evolve this structure like that. Okay, and then this would become the middle section. But the thing is, this, if you just look at this middle section, that would become so voluminous that if we did push to the upside, these are things you see after a while. When you have this much volume within a middle section, it becomes more likely that we will break out to the upside. And typically speaking, I would imagine that if we broke out of that, we will likely head up to kind of these highs here, because of the amount of volume that has been built up in this middle section. At this moment in time, we can still pattern separate the structures. Okay, so I'm not, you can see here, there's not as much volume potentially. It may be difficult for one or two of you to see this, but if we started heading up to these areas here, then the 4-hour chart would look extremely bullish. The daily chart would look, okay, it would look extremely bullish, and we also have that, we would have that massive wick that usually implies a liquidity grab for a move to the upside. Okay, at this moment in time, if we were to get this entry and push down, then things would look a little bit different. But if we started pushing up to this high here, this would look very bullish. And when it's very bullish with a big wick above it, that often implies that we're going to move a lot higher. You can see that wick there as well. So I'm just going to let this do its thing. You do need to be slightly more advanced at trading to be able to decipher what's actually going on here, just because it's a bit of a corrective wave Okay, and typically speaking, that's the other thing as well. You know, you could draw it. You could draw it that way, and you could say, well, this has got a lot of volume if we pushed up to those highs. But again, we've got, if you just look at the makeup of this as well, this is what I was saying a moment ago. If we just draw the structure on, you don't normally see a corrective move into the, so if this was a third touch up here, a corrective move into the second touch, an impulsive move down, and then a more corrective move out. So even the makeup of that wouldn't look quite right anyway, which gives me more reason to believe that how I've pattern separated the structures is actually the true structure, and what's actually going to commit. Again, that may be difficult for, but because we have, you know, in this instance, we have an impulsive move, a more corrective move down, followed by a more impulsive move up, which just so happens to be the same length as this move which has preceded it. That makes more sense for a move down to the downside from here. Okay, if it's difficult for you to follow, I apologize, but hopefully that makes sense. When a lot of the time when you've seen these structures enough over the course of enough years, you start to see things in a certain way because you've blueprinted the patterns that you look for in your mind. But that's what I'm going to be looking for, folks. I've tried to go into slightly more detail. I've put an alert here just to see if we start pushing up to these highs. And if we do, I will likely just take this off of watch. And I had an alert set here, which will likely trigger, if it hasn't already, for that move to the downside to see if we can get this correction afterwards. Thanks for watching, folks. I will see you again in the next video, which will likely be tomorrow, which will be Wednesday. Have a great day, and I'll speak to you again soon.